1-to-1 to recent highs and lows. Okay, this often determines, can you take a live entry, or the likelihood of you being able to take a live, or must you take an entry order, right? And if so, where must that entry order be? And you'll find that in some instances, you've got no choice. This is an instance of a position that I took today. Couldn't tell you how it's running in favor because I took this screenshot mere moments before, right? Before the call begun. I like the setup a lot. I took it as an entry order, and why, right? A few things here. It's an IBO. Now we did get our 4-hour trend change, cool. Now there's low here, not based on lows, but based on highs. So it was like high, low, lower high, lower low, higher high. Okay, trend change on our way up to R1. Now what else did we have? Daily pivot line with protection behind S1 and 0.75. Now we also had in favor a break and retest of this support zone, a bit clearer on the 1 hour, right? So what was support, like price wedged behind it between here. So there's a whole zone here. As broken retested. If we have a look at the micro time frames, we can actually see on the way down, price bounced off of that first. This is that whole zone there. It bounced and it broke, and then it looked like it was bouncing off of the bottom of that one. Hopefully, it doesn't just get stuck in this range for a while, but it's quite likely that could happen. But we hope that it pops to the upside. Ideally, we want them to bounce off of that support. It didn't, it broke, but again, we've still got that extra layer of protection along with 0.618. Now, I took this as an entry order when we didn't have the 1 hour bearish engulfing, and the four hour wasn't looking so, he was looking okay, he was looking fine, pretty neutral. Now, why did I place my entry order here specifically? My stop loss here specifically? Fib levels, right? The IBO strategy, just as a refresher, is, stop is behind 0.75. Entry is at 382 or thereabouts, which is also the 1 hour 50 EMA or thereabouts. And then the profit target can be kind of wherever you want, right? But what we're talking about, minimum 1-to-1 on all setups. This applies to CBOs, to IBOs, to whatever, right? Well, actually not. ACBs and ABOs both have their minimum, but that's 2-to-1. Right, this one's got a minimum 1-to-1 up to recent highs. They've got the price action pattern in the 4 hour 50. They've got minimum 2-to-1, right? So if we've got this, what this allows us to do, because quite often double tops form, right? We see like very similarly over here. Let's say that we had this break and retest here. We took an entry here. This is a pretty great example for the same chart. Price did happen to come up and form a double top here. Now what happens if we've got a 1-to-1 up to recent highs? Often recent highs are rejected, right? I don't know, 30% of the time, 30-40% on a good setup, it'll only reach recent highs and then pull back. And that often also depends on if we're catching a wave 3 or a wave 5 on Elliott wave theory. Wave 5s are obviously a lot more likely to reach just recent highs, but regardless of Elliott wave theory, on all setups we want minimum 1-to-1. So I couldn't take this one as a live entry in my mind, because for a live entry, it would have, like, you can now, if you were to pop up from here, because we needed to get this entry price here. We couldn't have gone with a higher entry price, right? In a perfect world, and if Fibs and everything lined up better, yeah, I would have much rather take an entry, like if 382 was a bit higher up, like the 1 hour 50 to line up a little bit nicer. So it's a solid enough setup. But I like that 382 and the daily pivot line lined up very nice. So that's where I put my entry order. This here, I tried to screenshot it with the exact position size, but it didn't. My profit target's actually up here at R1. It's up here at these recent highs. But when I was measuring it up, I know why I took the screenshot like this is because we've got a minimum 1-to-1 here. If I put my entry order a smidge up, just above 0.382, this would have only been a 0.8 reward risk. Now what the problem with that is if it were getting up to recent highs here, we can't guarantee that we've been able to remove all risk. So there's that added level of risk there. So if it were to run up, we're only in 0.8, rejected the top, pulled back, took us out, maybe we'd end up taking a 0.5 or a 0.3% loss. Not good, right? So I didn't have much choice. I had to even put my entry order down here. Now I could have tightened up a smidge with my stop, which I didn't really want to do. So it's kind of applying that pip snatcher theory where, you know, on our pip snatchers when it's a minimum 1-to-1, it's the same thing. We want to be trading up to those recent highs. Often where our profit target is, so a great habit to get into when setting your profit target, setting your positions, if it is looking a little bit tight like this or a bit to the wire, you put your profit target, regardless of where you actually want your profit target to be, you know, up to 4-hour 50 or whatever, put your profit target at recent highs, put your stop loss, so you put your profit target and your stop loss, you place them first, right? And then you play around with your entry until it becomes 1-to-1, it tells you 1-to-1. And then that is going to be where your minimum or maximum entry price can actually be, right? And that'll give you a pretty clear indication of, okay, I'm not going to be entering, as somebody I was doing one-on-one with today that entered up on the 5-minute, so 5-minute break, must have been 2-minute, on the 2-minute break up here on one of these ones, right? And I'm like, that's just too high. Right. Now, granted, his fib levels were drawn a little bit differently here, which also was a big red flag. This is the only option that we could be drawing for our fibs here. There was no way that we'd be drawing it from here. That's not a run and a pullback. Like that's one red candle doesn't comprise a pullback, right? That's just a run, bit of a blip, and then it carries on with the run. So there's no option other than this to draw our fib levels. But over here, 2-minute break, had we had our stop down here and our 2-minute break was here, like again, it looks like it kind of meets all criteria here, but you're gonna only get like a 0.6 or something up to that recent high. So entry price is really, really important, right? So likewise, if you can remove risk a lot sooner. So this is another thing, there's more elements to this, that if entry price, if you entered here, how much further would price need to go for you to even be able to start removing any risk, to be moving your stop up to, you know, half, remove 50% risk or so on. Much further. Whereas if you were to get in at this entry price, which is where I got in before I ended up doing this, then, you know, if price could pop up to where this other trader's entry was, whether it were here or here, once price gets to that level, that trade is only at break even. When now my position's begun, I could even start removing risk. So now I'm only down to 0.5% risk, where they may still be running full risk, right? And if they were to remove risk from there, well, that's just violating trade management rules. So yeah, that is that. I believe we covered everything. Yeah.